I'm Charlotte McLeod with investingnews.com, and here today with me is Leni, founder of Junior Stock Review. Thank you so much for being here. Good to have you.
Thank you for having me.
So it's been a while, and I wondered if maybe you can start by sharing some wins that you've had over the last 12 months.
Yeah, the last 12 months have actually been fantastic, especially in sort of a down market. A couple of the big ones, G Mining, this story from a developer into a full-out producer. And now with their acquisition of the Oko West deposit, they're going to be moved right up into the upper ranks of that mid-tier producer. That was about a 300% win for myself and for my readers. Next to them, Montage Gold was another huge win. The Lundins being the big backer. They come out, they were already shareholders, but they made it more public that they were taking an interest in Kone. And again, that was around a 300% return. And so those really led the portfolio. Average weighted return over 150% for the year. And again, in a sideways market, it was excellent. So we're looking pretty good going into 2025.
Yeah, very, very good. That's nice to hear. And just on the note of G Mining, I believe, I don't have it in front of me right now, but I believe we had a viewer write in asking, is this going to be a takeover target and which company might come at them? Any thoughts on that?
Oh, honestly, it's quite interesting. So one of the big things about Oko West is that the proximity to G2, which is Guyana Goldfields 2.0, their other, I believe, is still called Oko 2. These two deposits, the proximity for permitting and just for efficiency, a lot of people believe that these two deposits should be brought together. The interesting thing is that AngloGold has a position in G2, and obviously being the senior mining company out of the bunch with a multi-billion-dollar market cap would look like the obvious consolidator of the area. They're also pretty busy, though, with Silicon, one of the biggest stories probably in the mining industry in the last 20 years. Do they have the bandwidth necessarily to consolidate that area? I'm not sure. With G Mining's ability to execute on the construction front, and with that talent being not a ubiquitous thing throughout the world, I could see that G Mining continues to consolidate, and then at a later date, when things sort of calm down with Silicon and other aspects of the thing, Anglo comes in and probably consolidates that, or any one of these majors, because you're talking about now probably 3 assets, if it was in G Mining, that are highly desirable in this sort of environment.
Oh, it is very interesting. Thanks for going into all of those so specific. So just because we're talking about some M&A here, any broader thoughts on M&A in the mining industry right now, trends that you're seeing?
I think M&A could get really hot. One of the things is we continuously, senior miners continuously burn their existing treasuries in terms of ounces in the ground. And while we've seen some deals, especially on the top end for efficiencies, we haven't necessarily seen the development side. We've sort of seen the big guy and the big guy merge to become something bigger in sort of sideways or down markets. Now the gold price is up almost $3,000 an ounce. Margins are staying strong. Cash flows and cash treasuries are so big. I think 2025 could be the year where you start to see the development side, stuff that maybe isn't in production yet, or maybe on the cusp of production, start to get acquired. And that stuff sort of has a cascade effect where, maybe there's multiple companies that are looking at something. One comes in and does it, and then you see a cascade to the rest of the sector, maybe location-wise, maybe not. But I think precious metals is going to be that leader in terms of M&A potential. And at least the way I position my portfolio, it's as such.
Oh, yes. And before we go any further, I did want to ask about your portfolio. Yeah. So I guess broadly we can talk about what you're focusing on, but are you fully allocated right now, or do you have cash to deploy?
I do have a little bit of cash. Like I said, we did have some wins last year. And what I actually did, considering the strength of the gold price, I've left the concentration of the portfolio focused on precious metals. But I've also redeployed that into some of the positions I think have catalysts this year to really make themselves stand out. One of the things that I'm looking at in particular is X factors, sort of things that aren't run-of-the-mill or binary decisions like a drill result, catalysts that the market doesn't necessarily give any value to now, but if it comes to fruition, could really separate a company. Could I give you an example?
Please.
So Orion Resources has a bunch of projects in Finland. The one that's most important, I think, to the story right now that maybe isn't recognized by everybody is their JV with B2 Gold on Helmi is coincident with Rupert Resources' Ikari project, which just had a PFS come out. It was actually at this time last year, I said in my presentation, you should be looking at Orion Resources. I think there's going to be a deal. Given Ikari's proximity to the boundary with Helmi, a deal needs to be made to make sure that the Ikari deposit, which is world class, but if they're going to mine it, you need consolidation because they're so close to that property boundary. A week after, Rupert does a deal with B2 Gold, Orion share price soars, and we're sitting at about double. But I would say you still have a lot of upside from here if a deal is done. And in fact, that PFS that was done on Ikari, I think is proof in the pudding that I was correct on a deal having to be made for Helmi's ground. And I think that this year, for somebody who's holding Orion shares, you have the opportunity to maybe double again if a deal is consummated. And I think there's a high probability that happens.
Well, really interesting. And well, congrats on that call. It's always exciting to see something like that go through. So maybe we talk a little bit more broadly about what is happening with the gold stocks right now. Because clearly you've had some wins in your portfolio, but a lot of people are looking at the gold stocks and they're wondering, okay, like when are those across the board gains going to come? And you had told us last year at this time, this is the most glaring opportunity for a bull market. So what's happening with the gold stocks? What's your take?
It's a great question. It's one that I'm not sure I can fully answer. What I would say is, if you look at the reasons why the gold price is going up and you see who's buying that gold and where the gold is being allocated, I think you'll come to the conclusion that it isn't your regular retail gold investor that's buying gold. Really, it's the central banks. It's these entities that don't necessarily buy equities because they think the gold price is going to go up or because that they need to keep it. They're buying gold as a hedge, probably against stuff like the U.S. sanctions, like the transition from a Western-based or U.S.-based world economy into whatever's coming next. And that's the reason why the gold price is going up, because of those fundamentals. The equities are still languishing, I think, because that general retail investor isn't back. They're distracted by crypto, probably distracted by tech, the broader market, which has been relatively strong over the last year. And so I do think that changes over time. I'm not sure what the catalyst is to necessarily bring them en masse. But again, if you are able to pick the right companies, I think you can still really make money. And if there is going to be a bull market, I would say it's going to be in precious metals, in particular the gold side of things. We're just on that cusp, and I don't necessarily know, again, what's going to bring them back.
Yeah, you preempted my question because that's always the follow-up, but that's okay. That's all right. For the gold stock, last year you were liking the prospect generators for gold stock exposure. Do you still like them? Has your strategy or what you like changed given the market that we're in?
No, and I think even more so, I'm more convinced that is the best way, especially for general retail, to play this market. I think exploration is so important because it doesn't depend on the market cycle for you to get returns. Typically, if you're going to buy ounces in the ground, you almost need the metal price to move up really to get intention, unless you have some sort of X factor. We talked about Orion or something like that. With prospect generation, you're giving up upside, no doubt. They're giving up 70, 80% of the project, but you're using that senior mining company's money. And the best thing of all is you're protecting your downside risk, with the potential being that you actually make a discovery. And the longer I've been in this business, you want as most kicks at the can that you can when it comes to exploration. And discovery will pay you no matter where you are in the market cycle, which is incredibly important, especially for myself included, a person who can't predict where the market is headed at any given time. Now you have the opportunity to protect your downside risk, but also have the potential to get upside with a new discovery in a prospect generation company. But you have to be picky. There's a way, I think, to pick those. And I think I've done a pretty good job so far.
Yeah. Do you care to share any tips on how to choose that particular type of company?
I think you definitely want to start with the people. People that have had past successes, I think are definitely at the top of the list. Those past successes, especially with certain types of companies. I'll use an example because it's probably the prime one. Canadian Minerals. They have an existing discovery in Renault. That's a JV with Sumitomo. They've been able to convert that into a 4% NSR on Frotet. To me, that 4% NSR on Frotet, depending on what that resource is, I think it's multi-billion ounce, but I think that justifies their market cap as it is. So you get $30 million in cash, you get $36 million in exploration spend in 2025 for free. And to me, that is like the premier type of way to invest in the market, is buy things that they're selling for less than they're worth. And so if you can find exploration companies that are run by good teams, have a value proposition that's something in line, there's more than just Kenorland. But I think that's the prime example to sort of look at it, say, hey, where else can I find that? And there definitely is other examples of it.
Okay. All right. So we talked a lot about gold and gold stocks, and I have some questions for you on copper as well, although I know you said you've shifted your portfolio more in the precious metals direction. So we'll see how this goes. You'd mentioned for copper last year, positive long-term supply-demand fundamentals, but possibility of recession, that would be negative. And you still have these recession concerns on the table. We've also got the tariffs. We've got other U.S. activities. So thoughts on copper right now? Is this an area you like?
I do. And honestly, I think there's a couple different points. Precious metal is definitely where the focus is and the obvious differential for an investor to invest in. I think copper is the next most obvious one. It doesn't mean it's going to happen tomorrow, but I think if you look at where the world is headed, electrification, the quality of projects out there, like the difference between precious metals, copper, and basically everything else is the quality of the management teams and the quality of the projects that are focused on those metals. Those two are at the top. Everything else, you have to be very, very careful. Well, you always have to be careful, but you have to be even more careful with the smaller markets because there just aren't the same amount of good teams and there aren't the same amount of good projects out there. With copper, you have a lot of choice depending on what you, an investor, want to attempt to invest in. Exploration, like I said, you can win no matter where you are in the cycle, but you're taking a risk. For me, it's parlays almost to this, like what I said earlier. I want to look for a company that's looking for copper, but has some sort of X factor that separates them from somebody else. And if you can find that little nuance that the market isn't giving any value to, I think you're that much further ahead. But it takes time and due diligence for you to frame that, look at the catalysts and see what the market's missing.
Yeah, X factor. I like that. Okay, and I had mentioned the tariffs, right? And that's really just the tip of the iceberg in all of this Trump-related uncertainty. How are you approaching all of that volatility? Because I know you like to hone in on the company and kind of ignore these external factors. So what are you thinking?
You hit it. It's noise. And I think, the longer I've lived, I'm over 40 now. I've quite a bit of experience just in life. And that's what it is. It's noise. Politicians going back and forth. And I think more than ever, you have somebody in the States, Trump, who seemingly is fueled by that sort of drama, by, pushing around people. And that's sort of his MO. And I think if you just take it for what it is, you should be fine with it. You take it, move on, and focus on the stuff that matters. And that's really at the company level, the management teams. Are they sticking to timelines, budgets? How does the market perceive them? Focus on the stuff that actually really matters to the junior sector. And this political stuff, it's going to sort itself out. And I really don't think the tariffs are that big a news in terms of what I see right now, in terms of their effect on the sector. If anything, if they happen, it might even be better in terms of how it constricts supply for different jurisdictions and what it might do for the future of the copper price, the gold price, with a more chaotic environment.
Okay. And on the note of management, I know you've mentioned a couple of companies that you like. Do you have any favorite management teams right now?
Oh, 100%. I would start with one of the companies I mentioned, Kenorland Minerals. Zach Flood and his team have done such an amazing job assembling that team and assembling their project package that they have. That's why they attract $36 million in spending in a year. You can't find that sort of scenario in very many juniors. Other guys to look at, again, I'll go back, Orion Resources, Matty Talika, Dave Lotan. Again, you're talking about the top of the top of people in this sector. Some newer guys, Ewan Webster with Thesis Gold or Chad Peters with Ridgeline. Again, those are people I've invested in, and I think exemplify all those attributes that would be companies to look for success in 2025.
Okay. And in terms of following good management teams, finding them, I often find that when a management team or a person has been successful, they go on to do something else, and maybe it begins as a private company. So for investors, like I just had a conversation with Chris Taylor from Great Bear, and he's doing this new company that it's private, and people commented being like, okay, well, maybe tell me when I can get in. So any tips on how people can address that situation?
Private companies has probably been the biggest disaster in my investing career, unfortunately. But you have to realize this, and you really have to trust management. And I think Chris Taylor, if you're going to invest in a private company, that's a guy you can probably trust to run the company properly. And if he says he's going to go public within a certain timeline, he probably will. And so I give him the benefit of the doubt. A lot of the other deals, if you're looking at this as an investor, you have to look at timelines. Can you trust the management team from that perspective? Can you go without that money coming to market and giving you an outlet to sell it for 2 years, 3 years, 4 years? The problem becomes is on the private sector, they don't have any motivation necessarily to be upfront with you about financials, where they are with drilling, where they are with some sort of development. And that can be the disconnect. And for me, in my experience, unfortunately, the timelines can be astronomical. On one of my deals that I invested in a private company, I'm up to 5 years. And this was supposed to be 1.5 years. So quite honestly, I think for most, especially retail investors that maybe don't have big pocketbooks, it's probably not an avenue they want to go down. And the other side to it is, the companies we discussed and what's out there, there's so much opportunity in publicly listed companies that I would say, although it looks kind of sexy, I would put the private companies to the side and you let those guys that have the big pocketbooks and the probably longer timelines focus on that sort of thing.
Yeah. And as you said, many times they will start that way and then they go public. And I think there's also questions that people have of like, okay, well, like, when do I get in once it is public? Do I try to get in right away? Do I see how it plays out? Right. Any thoughts on that?
Yeah. So, and this I think you could put this up at that list. If you had to add one or two things that I would say why retail investors lose money, it's because they don't understand the value of something. Well, if you understand the value of a company, you can compare that against its price, which is not only the share price, but it's the share price times the share count, which is the market cap. You need to understand the price to value ratio. If the company is selling for less than it's worth, and that differential equals what you're willing to risk, like the risk is worth that differential, if it's recognized, then there's your answer right there. It's time to invest. And vice versa, if you're getting fair value, if this is basically the upside is only if a drill result comes through or only if something, then it's telling you, you should probably wait and see when the market's more irrational, or maybe you have to look somewhere else where I can get a bigger margin of safety, which is sort of ambiguous in a sector where these companies don't make any money. But margin of safety in terms of, I need a big differential here to protect my downside, and the upside sort of takes care of itself as the market gets better.
Yeah, and this ties into another thing that I wanted to touch on with you, which is the psychological aspect of doing all this investing. So it's not just choosing the right stocks, it's knowing when you want to buy and sell and your risk tolerance. So my impression is that you like to talk about this. So I wanted to see if you had any other comments that you would give people on that note and just knowing themselves.
Well, it's a constant process. Like I've been at this 9 years myself. I was at it a bunch of years before that, before I did this full time. And it's realized that it's a constant process of getting better, learning more, and it doesn't really stop. I've done pretty well for myself, and yet I can still, having the mentors I do in my life, I know that I have to continually go back to them and have clarity on things and stuff that I'm thinking about. Recently in January, I was in Vancouver for a couple conferences, and I had the chance to sit down one-on-one with a mentor. And we were talking about a certain situation. It was actually investment in a private company, oddly enough. And my feeling was, you know what, this company's overpriced. But I sort of felt this need to participate, but it didn't feel right. Like, yeah, I thought I should participate, but my gut told me no. And my mentor he's talking about it, and he said, you know what, your feeling, it's probably right. And it's probably the route that you should take. The key to it is, don't regret it if you're wrong. You're going to be wrong so many times in investing, in life in general, that you can't look back and kick yourself, because it's going to happen and you need to keep on moving forward. And if you made a mistake in your analysis, or you made a mistake in some regard, try to fix it next time, but don't look back and kick yourself. Like, I've had a number of losses over my career. Going 2 years back, 2024 was excellent. With 2022 and 2023, I lost a lot of money, and that was super hard on me. But in retrospect, it set me up so well for the stuff I did well in 2024 and what I will do well moving forward. So so much of it is psychological, and you can't beat yourself up for the mistakes you make because everybody makes them.
Yeah, I think that's an important message. And I will let you go, but before I do, just any final thoughts you would leave investors with, areas of interest for you right now? I feel like we covered a lot of ground, but anything you would add?
I would say, I think the opportunities in precious metals, I really do. And I think if anything, the best risk to reward is trying to find a company that fits your risk tolerance within the precious metal space. And we did cover a lot of good stuff, and find what fits you and your outlook, and don't be scared. Like, the other thing that I've learned is that to make a discernible difference in your life, you have to take risk. If you don't take calculated risks, don't expect anything to happen. And that's one of the biggest lessons I've learned. And I know if you're going to deploy money in this sector, you must be willing to take some risk, but you will be rewarded if you're right.
Yeah, calculated
risk.
Okay. Yeah, just to be careful. We add that word. Okay. This is really good. Thank you so much for coming on to go through all of these topics. Really good to see
My
you.
pleasure.
And hope to have you back soon.
Sounds good.
Good. And once again, I'm Charlotte McLeod with investingnews.com, and this is Brian Leni of Junior Stock Brazil.